What's behind your analogy between the Model 3 and the iPhone?
Well, the iPhone really set the stage for what smartphones could ultimately be. And I think the Model 3 has that same opportunity, not just for electric vehicles, but also for the opportunity around autonomy. And if you think about cars today, think about horses walking around on the road, because that's essentially the technology that a typical car is today. This is going to be a radical change, similar to the iPhone. That was a radical change when we went from a flip phone to a computer in your pocket. So that's the loose analogy between the Model 3 and the iPhone.
And you make a good distinction of sort of Tesla being a technology company, which is basically what you're saying, versus a car company. Has the market made that distinction yet?
I don't think so. And part of the reason is I still talk to a lot of investors, and they really think about the market cap of Tesla relative to other automotive companies. Tesla's bigger vision and their company vision is to accelerate the globe's adoption to renewable energy. So this is they even have a master plan even bigger than automotive, and I think that has not set in the minds with investors. If investors understood where Tesla was going longer term, all the negative news this week, I think, would not be having the impact that it's had on shares.
Gene, there's a lot of misinformation around this company, and I want to bring up two topics that maybe you can address. One is the cash burn, and the other is this idea of negative margins. Can you give me some context around that and give me the actual numbers?
So they are burning cash. They're going to have about a negative 4% operating margin this year. If you look at the street models over the next 3 years, that should gravitate to just above 1%. So they are not making a ton of money here. And that's the general concern from investors, too, is that ultimately they're going to need to go back to the markets. As far as the opportunity for the margins longer term, since we view this more as a technology company, the components, we think ultimately this can have a 15 or 20% operating margin, much higher than where the street's at for 1%. I think this gets to one of the other key misunderstandings about the company is what the longer-term profitability is. It's more like an electronics company than it is like an automotive company in terms of profitability.
Gene, as I understand it right now, Tesla loses some money on every vehicle it sells. As it sells more, does it lose less money per vehicle or more money per vehicle?
Less money per vehicle, because you will essentially get leverage in the production. And this is one of the negatives that hit this week, is their production numbers were at the low end of the range, so it begs investors' concern about what they can actually ramp. We believe they will be successful in ramping the Model 3. They're talking about 500,000 annual shipments of that in the next 3 years. And so to answer your question is that as they scale the Model 3 production, they will start to be profitable on each car.
And sort of wrapping those 2 points in together, I mean, that's a big distinction between where Tesla is now and where Apple is. I mean, Apple had a different kind of supply chain. They do have killer margins. They have killer cash. None of those things Tesla really has. What's going to be, why are you so confident that they're going to be able to reach this scale when it's really based at the end of the day on lithium production?
We're confident because there's a paradigm shift coming, and Tesla has a huge lead in this that is almost impossible for traditional automotives to close that gap. The gap is about every mile that a Tesla is driven today, it picks up artificial intelligence that makes autonomy even closer. Tesla believes that in 2 to 3 years they're going to have a fully autonomous car, and we think that that's a paradigm shift and will fundamentally create a greater market for Tesla. So we see that as a parallel to what happened with the iPhone and being a pioneer and a paradigm shift. The profitability is a huge difference between these two companies, but ultimately we think that when this market share is captured, profitability will follow.
Gene,